Good afternoon. Welcome to the weekly livestock market update on Brownfield. I'm anchor reporter Meghan Grebner with us as always to talk all things markets. University of Missouri, Scott Brown. Happy Friday and good afternoon.
Good afternoon, Meghan.
We are rapidly winding down 2023. And it is going to be a busy Friday, next Friday for us. Today, a little bit different of a story. We're going to talk a little retail prices. And probably talk a little bit more about what's been happening market-wise as we're slowing down in 2023. But first, let's recap this week in the markets.
Yeah, starting on the cattle side this week, Meghan, those live-fed cattle were about $2.50 lower this week. On the feeder cattle auction side, we saw strength this week after what was lower prices last week. We were up $2 to $8 this week in those feeder cattle auctions. On the futures side, we also saw strength this week. That February live cattle futures contract was up $3.85 on the week, and the January feeder cattle contract closed up $5.80 this week. The choice box beef price was virtually unchanged this week. We had rounds and flanks down. The rest of those components were up, all kind of washed at the end of the day. On the hog side, cash barrels and gilts were down 50 cents this week. February lean hog futures contract was up $2.90 on the week, and the pork cutout value another week of really unchanged. And just to remind ourselves the difference here, so pork cutout value relative to where it stood a year ago is down $2.60. The choice box beef price remains $36 above where it was a year ago.
I think, previewing a little bit of what's going to happen next week. We have quarterly Hogs and Pigs report. I think it's going to be interesting to see where that has been. The hog market just has been slow. It has not done a lot of anything in general, especially as we look at the cash side of things. How much could potentially a report next week change maybe how we're looking at business or how the industry is looking as we head into 2024?
So it certainly could be a big one when we unwrap that gift a few days before Christmas. I think we got a lot of pre-report guessers out there that would suggest a breeding inventory that's 1.5% below a year ago. So if we get a surprise in terms of a bigger cut in breeding inventory, or not as big a cut in breeding inventory, certainly could make us for higher or lower prices. So I think a lot of focus there now. Secondarily, and I don't want to say that necessarily it's not as important, but productivity. What are we going to get this third quarter? We've gotten a couple of quarters of very strong pigs per litter, and anecdotally, I hear a lot of stories of folks who seem to have PRRS in better control that talk about much better productivity they're seeing on those farms. So I think that's a big one, and doing risk protection before the report could be a winning move, or one should wait until after the report. I'd remind us we don't know which way this report will come out for us, but we could see some volatility in markets after, as you correctly identify, we've kind of been sideways here for a little bit.
And it's not like we're not efficient. You talk about efficiency. Is that kind of like, it's great for producers if they're thinking about their own operations, but as the market as a whole, as we increase efficiency, does that kind of get us lost in the woods a little bit?
So potentially, I think it does. For me, this all comes down to we were kind of used to what had been a trail off of productivity gains that now maybe come back. I've come back to be stronger again, and so then to get supplies in better control, we need a bigger cut in breeding inventory, and I think that's the tug and pull of those two numbers as to what unfolds in 2024. And although I've been a broken record about this, probably, I think structure on the demand side continues to be more inelastic, which just tells us that small changes either direction in the supply side can get us big swings in prices.
All right, let's take a look at weekly slaughter numbers as we look for both cattle and hogs. How how busy were we?
So we got bigger runs this week. So USDA tells us for the week ending December 16th, the run of 649,000 head of cattle slaughter this week. That's up 14,000 from what we did last week and up 27,000 relative to a year ago. And the run on hogs this week, 2.689 million head. That's 15,000 head higher than what was a pretty good run last week and 109,000 head above where we were a year ago.
When we look at those comparison numbers year over year, how are we stacking up for cattle and hog slaughter?
Yeah, on the cattle side, down 4.5% year to date, which we're almost got this year behind us, and hog slaughter up 1.6%.
Retail prices is the big report out this week as we take a look at both beef and pork prices. Maybe not necessarily good news on the producer side, but I would assume some good news for the consumer side of things.
So yes, November choice retail beef price. We got $8.04 a pound from the report this week. That is down 1.5% relative to where we were in October. When you look a little bit at the individual components here, sirloin steak prices down 1.4, but ground beef still higher this month relative to last. It was actually up 2.4%. Tells you a little bit about maybe some switching going on, that getting a little stronger ground beef demand as maybe some consumers are making a swap from higher priced beef to some lower priced beef. On the pork side, retail pork prices $4.88 for November. That's down 3.2% from where we were in October at $5.04. Now, when we start looking at where were we prior to COVID-19 outbreak, we're still talking about relative to November of 2019. These retail prices, Meghan, are 25 to 35% higher than where we were back then. I will say for you, the best news out of this report, as you now know, will be that bacon prices at $6.90 was down 4.5% in the report we got this week.
Well, I will take it. Any improvement helps. We've talked about this before. Scott, is there a fine line where, yes, we want to see prices go up, but where prices, like an intersection where consumer demand is good, producers are making enough money, but we're not seeing a pullback in demand because prices have gotten too high? How important is it that we stay in that like happy medium to make sure everybody's content and business is going as usual or better?
Yeah, so there is some coordination of some sort that we need to talk about as we think through this. I will say, when I think about from farm to retail, sometimes we'll hear farm to packer, and that packer's getting too much of the margin. I want to focus on packer to retail. That's a margin that stayed very wide since COVID. And if we want to see this where we sit in terms of, I'll take pork, retail pork prices, and we want higher hog prices, to me, it's wholesale to retail where we need to work on trying to reduce that margin that's there. Now, I'm not saying it's wrong that we have these high margins either. It's just that the costs, labor, transportation, all remain high. But when I look at what we're doing, I think it's important to remind ourselves that from wholesale to retail has really been stubborn to move lower.
When you take a look at that overall CPI number, what do you take from it, and how does that kind of set the stage as we head into 2024?
Well, I think we're finally flattening out, right? So, and I should be careful about generalizing, because it was a 3.1% increase in the November consumer price index. relative to where it was a year ago. But after very strong and much stronger inflation, we've kind of been in that 3 to 4% for several months in a row now. So I think maybe we're slowing some of the general inflation. Stock market's decided that's great news this week when you realize some of the gains that we saw to record levels in some cases as we've gone day to day. And so I think the story goes here: inflation under control, and if that continues, we see the Fed loosening and maybe lowering interest rates. But let's just understand that 3.1 is still not the targeted 2% thereafter, and it may still take a few months into 2024, but before we see a cut. But if inflation continues to slow as we go further into 2024, I think that's good news for consumers and potentially translates into better meat demand in particular.
I think it's interesting, and I had this conversation with somebody earlier today talking about inflation as one element, but also taking a look at the longer term interest rates and how that's also telling a story on the productivity or the profitability side for producers. How much are you watching what happens with that as we look ahead to 2024?
So given where interest rates are at, I mean, the return necessary when you have those higher rates is very different than where we've been for the past where it had very low rates. So I think it has had some cooling effect in terms of expansion. And I'll take the combination of the cost to build new facilities on top of the interest rates one has to pay, I think keeps the supply side in check for many of these livestock commodities here for a period of time. So perhaps, and I always say it doesn't take much of a change in supply to get us to be maybe in a more positive outcome from a price standpoint. So maybe that's where we get in 2024. And we can take hogs where it's not been the outlook's not been very positive. And I just remind us, it doesn't take much to get us to a more positive outlook in front of us. I still worry about the outlook for the pork industry, but maybe that'll be the good news pork producers get to find as they go through 2024.
Well, here's hoping. All right. So we already talked Hogs and Pigs comes out next Friday. It's a busy week. We have livestock slaughter on Thursday. Cold storage is out on Friday, but also out on Friday is cattle on feed, which is our last one of the year. Do we get heifers on feed in this one?
We do not, but we certainly get a shot at what placements look like in November, which will be important for our discussion next week as well. So we get the quadfecta of reports out from USDA next week.
It is literally the Christmas present that keeps giving on the Friday before a long weekend.
I think we need to convince USDA to change the timing of the release of these reports that we always get out right before Christmas.
Your lips to their ears. So USDA, if you're listening, even if they would spread them out so they're not all on Friday afternoon, that would be the gift of a lifetime.
They could put 2 Meghan Grebner on and put it under the tree, right?
A beautiful bow. Scott, it is always great to chat. We will talk to you next Friday for report. It's so they keep talking tomorrow or Saturday has the game of the years in games of the year in basketball. It's Purdue and Arizona, Kentucky and Carolina. IU is hosting Kansas. So it's a great day for sports. That's our next Friday. It's the game of the year for reports from USDA.
Yes, we'll certainly have plenty to digest. And I'll say for producers, think about price risk management before these reports hit. They could be good news. They could be tough news. Think about what you want to do in your operation. It'll be a big, potentially a big move for the markets. Maybe we'll get exactly back what we think's coming. But big set of reports here next week.
Scott, great to see you. We'll talk to you next Friday.
Sounds good, Megan.
So our weekly livestock market report delivered to your email box every Saturday morning at brownfieldagnews.com. You can also submit questions and comments, and this is a good week to submit questions heading into these reports. And for what happens every day in the commodity markets, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.